Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, April 14th, 5:10 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we continue to be in a harsh correction, 12% off of the highs. We use 12% as kind of the dividing line between moderate correction and harsh correction. So we have rallied over the next couple of days, but haven't really seen what we consider strong enough action for a follow through day, although there has been some improvement in the indexes and stocks. Take a look over here at the trend gauge. We still got the detested four red arrows, but we added a yellow sub arrow for some improvement in market leaders. We don't have a 21 over 21 list, but we do have a Purdy 30. That's 30 stocks there. They're not all over the 21, but they've got good fundamentals, solid charts. We'll take a look at those 30 names. So yellow sub arrow on leaders. As far as our timeframes go, yellow sub arrow for short term as we are rallying into the declining 21-day moving average. The Nasdaq actually touched it and got rejected today. The S&P came close, but coming into that level, see if bulls obviously want to overcome that level, turn the slope of that line up, and at least turn a short-term trend into an uptrend. Firmly below the 50-day and 200-day moving averages. Those are our medium-term and long-term trend indicators. So what happened today? A lot of talk over the weekend. Supposedly an exception list to tariffs came out that was going to benefit semiconductors and electronics, such as the Apple iPhone. Then Sunday morning on the talk shows, they said that we're not really having exceptions. Those are going to have their own tariffs. For now, they're going to be 20% before they get evaluated under a separate section of the tariff rules that they're coming up with. But 20% tariff is certainly better than the 100 and whatever percent uh, for China has been proposed. So the futures opened up green, pulled back a bit the first hour, but then rallied overnight and were firmly green into the close. So we gapped up, but that was the high of the day. We based for a little bit, pulled back, rallied. And end result is we were firmly green on the day. Weak close made it mildly disappointing. We are making higher lows again, but we're now into the declining 21-day resistance. We'll go all through it when we look at the charts. The big eight, disappointing today, up an average of 0.1%, but the RG8, all eight components, positive. This is our eight growth ETF composite that we helps us keep our finger on the pulse of what's going on in growth stock land. Up an average of 1.25% today. S&P 500 gapped up 1.7% at the open, so obviously a 0.8% gain is somewhat disappointing. Equal weight up 1.28. Value outperformed growth today. Nasdaq 100 up, gapped up 2.2%, but only finishing up 0.7. Equal weight up 1%. We'll take a look at the Dow mid and small caps when we go through the charts. Global 60/40 stock and bond up 0.79%. Our flagship GROTECTION portfolio continues to dip toes in the water, but underinvested versus the S&P 500. Our beta did tick up a little bit today to 0.26. Came in at 0.19. I'll talk about the buy that we made today as we continue to monitor the market closely. Let's go to the charts. Here's the S&P 500 and 1, 2, 3, 4, 5, 6 higher lows. Well, 5 higher lows if you count the lowest low as 4.8, which it was. Not making a higher high versus last Wednesday's move up. And you can see coming into that declining 21-day moving average, which we failed at in mid-March, failed at again in late March. Then the big gap down started with the reciprocal tariffs, trying to correct from there, facing an uphill battle. We're holding the ultra short term 8-day exponential moving average and the 5-day simple that we reference. We've kind of added that to our repertoire, but stuck between the ultra short term 8 below and the declining 21 above. Who's going to win? That is kind of obviously forming a bit of a pennant here. And Another day tomorrow, we'll see what the market brings us. Volatility down a bit today, which was good to see, less than 2% after the average over the last 21 days, above 3%. Here's the NASDAQ 100, similar action, rejected at the 21 last Wednesday, rejected at the 21 today. These are actually very good short-term short opportunities. We weighed putting that on today, but didn't quite do it. Obviously, we've got the lower highs, but also, again, 1, 2, 3, 4, 5 days of higher lows. So the rubber's going to meet the road, and we're going to give one way or the other. That break, one way or the other, could always be a false break, in which case you have to be on guard for a failed moves to fast moves in the opposite direction move. Nothing easy ever in the markets. If something becomes too obvious, it usually doesn't work. Let's go to equal weight S&P 500 very quickly. Lagging on a relative basis over the last week, the market cap weighted S&P above the 8-day, didn't come into the declining 21-day yet. Let's go to the Dow Jones Industrial Average, up 0.78 today, into the declining 21-day moving average, above the 8-day moving average. Stop me if you've heard this before, but you're going to hear it at least two more times. Here's the 400, mid cap 400, again above the 8, below the 21, 5 days of higher lows, and Russell 2000, we'll just say ditto in this case. Very weak, actually just sitting on the 8-day moving average. So those are the major indexes. Let's go to some inter-asset correlation. We'll start with the VIX. VIX dropped to a 30 handle today. That was down 17.7%. 30, using the rule of 16, implies a little less than 2% over the next 30 days. That's obviously a tick down from where it was last week, and making more than 1 week lows around this 30 level. You can see we topped here in the 28s and the 29s here, 30 acting as support, as is it's the 21-day moving average. Moving averages don't really mean much to the VIX. It's just really a reference point. But the bulls want to see it obviously get back below that 30 level, and ideally below 16, which implies a 1% daily volatility on the S&P. That's where we really want to be. Let's go to the dollar. Dollar week broke down last week after just this has been sloppy, and it's usually the dollar doesn't fall while the indexes are falling, but that's what we've seen lately. But the last 3 days, dollar making lower lows while the index continues to make higher lows. While we were coming down, I should say, the dollar was falling also. That correlation broke over the last 3, 4 days. But weak dollar normally good for stocks. You can see this 100 level support all the way back here in September. That's where we're hanging around right now. On to precious metals. Gold, oh, strong gold, down on the day, down 0.6%. Silver, positive by 0.65%. It has been lagging gold, obviously, and GDX, making another higher high, up 0.64%. Gold stocks really, no question, have been the leading index. We got shaken out down here when it had this harsh pullback, when it seemed that everything was getting, actually, no, that's GDX. We sold that a couple weeks before that. GLD is where GROTECTION got shaken out on this break of the 21-day moving average, which it obviously made fools of us, turned around, went higher, but that's happens all the time. So that's gold, silver. How about Bitcoin? Bitcoin, uh, tight action here between 50 and 44, regaining the 21-day moving average today. This 200-day appears to have acted as support for it. Next move we want to see on this is a move above 50, which is the declining 50-day moving average. On bonds now, the broad bond index BND up on the day. Bonds and stocks are moving in a complete 180 inverse correlation, especially intraday over the last couple of days. If rates come down, yields come down, stocks have been moving higher and vice versa. So here's BND, broad bond index, price up. That means yields drop today. Here's TLT, the long bond, up 0.71, which means the yield dropped on the 30-year and also dropped on the 10-year. And like I said, intraday, you could watch TLT and the yields, TLT moving with the market because that reflects the inverse of price. So that's our inter-asset correlation. Let's go to the tail of the tape. We do have the stochastics in our favor on the RG8 and on the major indexes. NASI's weak, dollar down, yields climbing, percent above the 5-day, not good. It's at 90. So this quick move up and these higher lows that we're making, that 5-day was at 1% last week. Just a very quick slingshot move from the secondary indicator. News, I mentioned the tariff exemptions. Were they really? I don't know, mixed news, but the market seemed to like it. He's coming into today, S&P 500 and NASDAQ 100. Would they hold their 8 EMAs and 5 simple? They did both. Could not get through the 21-day moving average. A little bit of decent action in leaders. You'll see that when we do the Purdy 30. Follow through day, no. It was close going into the close. We were needing 1% or more with the NASDAQ had higher volume, but a big fade into the close made that a moot point. Day count, second day up. 2 days above the 8-day exponential, 14 days below the 21. One of these is going to give this week, one way or the other. As far as sector goes, all 11 of the spider sectors higher, led by banks, staples, utilities, and real estate. Those are defensive sectors. But biotech, a growth sector, also had a good day. To the downside, gold producers, that's XOP. Let me make sure that's right. Yep, XOP and gold both were down. GROTECTION holdings increased by Palantir as we did 3% buy on that today. That ticked our adjusted beta up to 0.26. Balance at risk 0.98%. Bottom line on the day, firmly green, making higher lows, but now into 2021 EMA declining slope resistance. Bulls want to see if they can get through that and have some leadership included in that. We've got some decent setups, especially double bottoms. We've been talking about it. Tuesday's key is we're going to stick with the S&P and the NASDAQ 100 against their 8 EMA and 21-day EMA. That pinch, see if we win one way or the other, and continue to look for leadership and or a follow-through day. Let's get into these Purdy 30 charts, y'all. Let's go. We'll start with what we own. We've been mentioned for a while that Palantir was our number one name. They got a big contract with NATO over the weekend. It gapped up, but it faded as well. Here's the 5-minute chart. You can see the big gap up. We got a starter there after it pulled back and started coming higher. 2% starter added 1%. Then it faded, trending higher but weak along with the close. You can see the daily chart. Not good to see it closing at the bottom of its range. We're using this 8 and 21 as our stop on there, so won't give it much room to the downside. But from a relative strength standpoint, over the last week and a half, it had been extremely good. We like the volume patterns as well. And the fact that the volume on the 2-day pullback after the move up on Wednesday was lighter. So some subtle bullish clues there. But again, this will not buck the trend of the overall market if that does not go higher. So that's number one. Here's the next 29, GDX, which you already looked at. Ollie's continues to hold up well. So what you want to look for here is, along with the market, continued higher lows by these names, helped by some relative strength. And not all are going to be above the 21-day moving average, but they'll be close, I mean, into the declining 21 or above the 21. Berkshire Hathaway just continues to be strong. This isn't a panacea, though. You can see how hard this sold off on those big 3 days down in the market. Perfect entry would have been a bounce at the 21 or the 200-day moving average there. We have a strategy we don't use a lot called Titans at the 200, and we just missed it. By the time we blinked, it was well off of that level, but still looking good. Garden Restaurants reclaiming the 8, 50, and 21-day moving average today. Not the best volume patterns. You can see the three red candles on the sell off there, three above average volume, not candles, volume sticks, but reclaiming those levels today. Northrop Grumman, strong near higher highs. Anything that's above last Wednesday's high is automatically showing serious relative strength, and this one has been as well. Europe really stepping up to fund the Ukraine war after U.S. pulled back a bit. TKO sitting right on the 21, good fundamentals, little double bottom setup there. TJTX, big shakeout below the 50-day last week, regaining the 21 today. Celsius continues to show relative strength and just really ignoring over the last 4 weeks that we were even coming down in the market. Sprouts, relative strength, new high, can't ignore that. BJ's popping to new highs, 52-week highs, in fact. You can't ignore that either. Not really the big growth numbers that you would want, but the relative strength and the price action certainly there. This list kind of a combination of potential leaders based on fundamentals, a decent setup, and some things that have been holding up. Spot poked its head above the 21 day today, but failed into the close. Robinhood, 2 days above the 21 now, has the 50-day above it. DoorDash closed at the 21, 50-day above it. And again, that double bottom setup. Netflix cleared the 21-day today. Uber cleared the 21-day last week into the 50-day moving average. Nice relative strength over the last week and a half. WGS, nice strength today, clearing all its moving averages and above that 100 level. MP Materials, China announced that they're reducing or cutting exports of rare earth metals to the U.S. MP is a rare earth miner and owner and operator in the Western Hemisphere, up 21% on 517% volume. The volume times the price is coming into the area where it makes it attractive for Revere. We like the daily dollar volume to be over 100 million. This is very approaching it very closely. And you can see the 324% 2026 fiscal year bump up in projected earnings. KTOS, a defense stock, nice bounce off the 200-day moving average. Axon reclaiming the 50-day today. LRN showing relative strength above the 21 and the 50. Guardant Health gapped up, relative strength new high above the 21 and the 50. GE Vernova rejected at the declining 50-day, but above the 21-day. Lantheus Holdings, 3 closes in the last 4 days above that 100 level and the key moving averages. Take-Two above the 21 and the 50. Primo Brands Water above the 21 and the 50. Vertex, nice day today, clearing the 21-day decisively and a downtrend line. And they've got the N in Cancelim, which is that new non-opioid pain reliever. LNG, Cheniere, clearing the 21 and the 50. CrowdStrike, briefly above intraday, but closed below the 50-day moving average, but above the 21. On a lot of these, just a matter of we need the time to get the 21 back above the 50, and that could coincide with a break above the middle points of some of these double bottoms that we're seeing. And of course, we're going to need the overall market to participate as well. And number 30, Bitcoin, we already looked at that, closed right above the 21 last week on Friday. A little bit of room above the 21 today, still below the declining 50-day moving average. And y'all, that's your Purdy 30. And that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. We've been seeing a lot of people contact us, liking the way we preserved capital just the way we said we would. Our portfolio's less than 9% off of the highs. The market several times, and by the market, I mean the S&P 500, several intraday drops below 20% from all-time highs. Kept our powder dry and we're ready to deploy it if the market gets right. It's a common sense approach. You don't wear a bathing suit if it's cold out, just like you don't wear a winter jacket to the beach. You got to be ready and treat your portfolio. If you know what to look for, treat your portfolio the same way you do every other aspect of your life. So, uh, our flagship portfolio, GROTECTION, designed dual mandate: grow assets during uptrends, protect them during downtrends, and we're very, very open about how we do things. Most transparent advisor you'll find, detailing every night on video what we do. We produce content 7 days a week, 5 market review videos, 1 podcast, and a weekend walkthrough to get you ready for the upcoming week. Todd did a fantastic job on that, fighting through a bad cold on Sunday. Hats off to him, and hats off to the whole team at Revere. We're pleased that we followed our rules, stuck to our plan, and survived this harsh sell-off. SWAN, that stands for Sleep Well at Night. One of our valued clients made that acronym up, and we love it because it's exactly what we do. We want our clients to rest easy when they lay their head on the pillow. And with that, I will wrap it for Monday, April 14th. This is Don Vandenbord with Revere Asset Management, telling it like it is. It's not how much you make in the market, it's how much of that you can keep. Thanks for listening and have a great day.